Rokmaster Resources Corporation has 3 projects, but this one is, I'm going to focus today on our Rebel Ridge project, which is located in the Kootenays in British Columbia. Our team is myself, President and CEO, and my 3, there's a total of 3 directors in the company, Michael Cowan and Adam Pankratz. Below that, we have management involving geologists and financial experts. Craig Perry, who some of you might know, Dennis Kohuko, lots of experience as a chartered accountant. Jim Oliver is our geological consultant, and he's actually up on the property right now doing the work on Rebel Ridge. Mark Rebliati, who focuses on our senior geology, also in the QP scene. Harvey Trombley is president and owner of, or not president, but the owner of High Tech Diamond Drilling. Stacy Friedman, metallurgical, and Ted Marrero, Ted, who's our lead zinc expert that we have on our team, who focuses on that type of mineralization that we have on both our zinc property and on the Rebel Ridge. Share structure of the company, we trade on 3 exchanges in Toronto, US, and Germany and Frankfurt. Issued and outstanding, and shares you can read there. We are in the money on some options, they're being exercised. Some warrants are in the money, they're being exercised. In total, if we take all of those warrants into play, that what might bring in another $8 to $10 million. We are fully funded now for the program we're working on, and currently have a little over $8 million in the bank account. Share ownership is pretty good. We have Delphi and Crescat taking over 20%, and then our group insiders and friends and associates about 30%. That chart just shows the year last year from when we started this at approximately 6 cents up to when we got some of our first results out just before Christmas, taking us close to 70 cents. That's a typical looking junior explorer chart, going up and down in waves like that, depending on results and timing, metal prices, and other market things that have to happen in this business to make it go. We don't have the 2021 piece on there yet, but we'll have that on our website. Location, slightly north of Revelstoke, BC on the Trans-Canada Highway. You'll see it down there in the bottom of the picture. And we're lucky to have that highway, that Canadian Pacific Railway line, and also great population there with people who have been involved in everything from tourism to heavy duty mechanics for railways. There's electricians, there's lots of mining and logging type of history in this area that we can utilize on our project. Access, paved road up the highway, up the side of the, just past the Revelstoke Hydro Dam, up Revelstoke Lake, and then you turn off about 30 kilometers north onto Carnes Creek Road, and we drive in 12 kilometers to the site. We are able to operate that year round, and we're currently there now drilling on that site. Quite a large property, bounded on the east by Imperial Metals on one of their lead zinc projects, slightly to the south by Teck and Affinity on, again, lead zinc projects. Our land position is basically takes in anything that we feel we need for the structural component we're looking at right now, plus other additional different types of targets. And that covers an area about more than 100 square kilometers there. There's some notes on the side there that I'll pass on there. So getting to the real meat here, we've got a toehold already on this project of 9 million tons, running approximately 2 million gold equivalent ounces in both, in all 3 categories, actually. And you'll notice on the right that those are gold equivalent numbers. I'll show you the breakdown in a minute. Down below the main zone, which is the RRMZ, it stands for Rebel Ridge Main Zone. Down below that is Rebel Ridge Yellow Jacket Zone. That's a base metal silver zone. And it's only got a few holes in it because it wasn't originally the target at the time. We might have a lot of success expanding that as we go forward. That's got about 900,000 tons we can see here. That's not a diluted number, 764,000 tons of about 10% zinc. And you'll notice the silver grades are quite a bit higher than you normally have in the Kootenai carbonate hosted deposits, which usually run 4 to 6 grams, not 60 grams. We're quite excited about that. So the main zone, orogenic, large reverse thrust fault with a large planar deformation zone all along that. We've got thicknesses of mineralization up to 15 meters. This thing can be followed pretty readily by outcrops and some small workings like trenches for over 8 kilometers along this trend. And it's mostly mineralized with gold, silver, lead, zinc, arsenopyrite, pyrite, and some small amounts of other minerals like chalcopyrite. So we figured out in our PEA, which you can take a look at our website, that we can deal with a refractory gold that we do have on this site. And we have had success doing that and coming up with some positive, very positive numbers that can make us a lot of money if we decide to go down the production path. That's in a PEA, not in anything higher grade than that. The lead zinc zone has no metallurgical issues of any kind, and it makes a good concentrate grade of high silver in the lead con and a good zinc concentrate grade, which can be, there is markets for that just down the highway at Trail BC, at Tech Smelter. Current resources, you'll see how they break down into the actual gold ounces and silver ounces, but on my screen it's covered up, but we've got the gold grades there of probably around 5 grams gold, and then that's probably about 2/3 of the value, and then the rest is made up by silver, lead, and zinc. There is some small tonnages you'll notice below the main zone, hanging wall zone and footwall zone, but another 100,000 ounces that's not added into our either our M&I or our inferred mineral resource notes. We'll pass on that. So I'll just touch on the PEA that we managed to get out at the end of the year. It shows a pretty long life mine. I'm using $1,561 gold. You'll see there in the upper right-hand corner. That was the 2-year average price. 29.5% IRR and a 5% discount. 2.5 years payback. And that's about a fairly high grade mine of around $300 a ton. And that's the NSR. That includes everything, including losses, anything like dilution. It's $300 a ton. Life of mine, probably around 12 years. And that's just taking in the tonnage that was in the original resource calculation on the property, which many of you probably aren't aware of, because the main work that was done to incorporate that, the company was not a public company at the time. It used to be called Merit Mining, became Huacan Mining. An original PEA was done in 2012, which only incorporated 1 million ounces of gold. The work that they completed in 2012 actually added another 1 million ounces, and that was not put into a PEA. So we've done that, showing the 2 million ounces with the returns that we've got here. And those are, we're providing in this PEA for high-end equipment to take care of pre-treatment of a gold concentrate and make sure we have good recoveries on the lead and zinc and low deleterious metals there, so they're sellable. We're spending lots of money on environmental things that you might not ordinarily do, but I think that's the way we should go these days. We're budgeting for dry tailings storage area with also a paste backfill expense, putting about half the dry tailings back underground. So we're not cutting any corners there, and we still end up with a nice 29.5% IRR after tax. This option was negotiated in 2019. We thought we would take this project because it had already been attempted to be operated by another junior who had a very difficult deal on it, and they had a lot of backing clauses. They had equity payments tied to minimum prices. They had a large royalty. They had a lot of things, and they were unsuccessful in getting the market to take this on. So we stepped in and knew some of the previous management and talked to them about it and managed to essentially deal with a Chinese company to get their money back. They wanted to leave North America and Mexico, and they have done that. So we've got a 5-year option that's cash only on the property. There is no share payments. There's no royalties, no work commitments, no back-in clauses. And we've made the first anniversary. The first down payment was made. The first anniversary payment was made this last month on February. And the first couple of years are fairly low payments to get us over our decision-making process that we would need to do to move forward to the $44 million total payout. That $44 million is Canadian dollars, and that includes all their assets, not just the property, but it includes private lands, equipment, and everything else that we need to have. This is a hard deal to replicate. It's got 8 kilometers of structure. It's got 4 mineral zones. It's got good grade. And like I said, comes with all the equipment. Geology, I won't touch on too much other than to say the main zone is 800 by 1500 meters where drilled only and where exposed on the surface. It's known for 8 kilometers. We're now drilling around that from underground workings only. We're going to move to the surface shortly and take up targets that are scattered to the north over 5 kilometers and to the south 3. There's a good shot of the main zone and Yellow Jacket zone there, just looking at that large planar sheet of sulfides that it sits exposed and on the surface, and then where we can get to it from underground, that's the drilling we're doing now. So this program is a 10,000 meter drill program for underground, and then we're going to take the balance of this year's planned drilling and do that on the surface. There it shows you how we can step out to the east and shoot down using the plane. Some of the rock shots there showing good grade, different banded mineralization. These are a new hole here, hole 2128, there where we hit the nice approximate 16-meter intersection there. This is the best map of all showing where we're at. If you take a look at RR30, that's one of the latest holes in the bottom left. We've pushed this down to over 1,000 meters down there below that level of underground workings, and we're going to fill in that gap between R30 and 23 in the next month. 80% of the holes we're drilling are hitting sulfides, and we're quite happy about that. We've only got assays for 11 holes, and we expect the balance of the holes up to hole 21 to be this month. So March is when we expect to have the bulk of the results in. There's a little bit of a shot of some of our peers. We're at $20 to $23 an ounce in the ground, up to Pure Gold with 300. Pure Gold, by the way, had to drill 1.3 million meters to get their 2 million ounces. We've only got 40,000. None of the drilling that we've done or the results we've got so far is included in the resources that I've been talking about. We'll be putting that out at the end of the year. As you can see, we've thought about a process site on site, and we can jam it in there and make it happen if we decide to go down that path. All of this is on our website, and we have various photos of the new drill core that's been coming out over the last few weeks also. So take a look at that. Permitting for the surface, we're in the referral period now, so we expect that in the next four weeks. Budget, $9 million for this year. Drilling in progress. Thank you very much.
One aspect of the Rokmaster story that I always remember is that you negotiated to buy this asset, the Rebel Ridge asset, when Rokmaster as a company had like no money. You had like $200,000 in the bank, and that's it. And yet you committed to a deal, that has a $44 million price tag. To me, that sort of speaks to what the project looked like to you when you first saw it. Do you want to just go back to that time frame a little bit? Because I think that excitement is an interesting part of the story.
Yeah, well, that was the exciting part for me, was seeing the blue sky. And I've been on this property before in the past and walked for miles on top of mineralization there, and didn't understand that when they'd gone underground, mostly Ross Beatty and subsequent Chinese, they'd only gone 1.5 kilometers on this zone underground, and that's where all the work was being done. Very little was being done on strike. There was obviously prospecting, geology, and trenching and geochemistry and that kind of thing. But boy, it's just sitting there wide open. And as you can imagine, it's had a difficult history because metallurgically, nobody produced 1 ton out of there. It's all still there. Metallurgical testing was done. Most programs focused on metallurgy for obvious reasons because people could see there's miles of mineralization. So let's just focus on that. Drilling continued most times when each group was there, and none of them got stonewalled on that. It always expanded. But for instance, good example, Ross got 10 years into the deal, and the second NDP government hits. Not that I'm knocking our current NDP government, but gold price $250, and see you later. Where's he? In Peru. Like Louis said, he started the first operation down there. This thing just hung around forever with those couple of warts on it. So when I was looking for a gold project, this one was always in my mind as being something we could expand readily. It's not a production discussion, even though we've done a PA to talk about that. This is a drilling project. And we're just going into that, if you can imagine, the first 1,500 meters of this thing. And it looks like we've almost got another 30% added to the resources when I get some assays back, and before I fall asleep, I'll tell you. So we're looking at, by the way, about 10 holes worth of assays this month. I finally got an answer out of them, and they're pretty embarrassed about all that. But but it's the blue sky. There's just miles or kilometers of stuff to touch on, and we're all getting excited about getting out away from this 1,500 meter zone on the surface. And we've been mining some old data. We've got some great targets based on geochemistry and mapping done by Ross's team, British Petroleum, Miranda. Some just tons of great work done here. The Chinese did fantastic work, but same thing. They enjoyed a gold market that started in 2012 and kept going down until they packed it in. And that luckily, when we got involved in looking at this project, it was a low market, but it smelled like it was going to go up. And we talked a $20,000 foot on this was what it was. And then the first payment after we negotiated a deal, and 6 months later was 200,000. And yeah, we did a financing at PDAC for 6 cents. And but when you see an asset like this that can only get better, let's just keep it simple. And it's $40 million. But right now, even at $1,700 gold, that's cheap, really cheap. We're undervalued. You could look at the peer charts. I mean, it's,
certainly, I mean, the $40 million thing, I'm sure, comes up every time you have a conversation with anyone, right? Because yes, it's a significant sum of money. Even if it is a good deal for the asset, everyone's going to say, oh, you have a $40 million payment in the future. Right. And fair enough. I mean, I looked at it and decided that a $40 million payment would be very financeable if this thing continues to grow the way that it looks like it can. And I guess that sort of, you were talking about that just now, but let's talk about that a little bit more. The consistency of this sheet of mineralization, not only the consistency of it, but what would then be the mineability of it, because it sort of like sits in exactly the way that you would want a sheet of mineralization to sit to be mined. I mean, you step down with those holes and just bam, bam, bam. It's amazing, right?
It is. And, it's not that simple, but with a team like, where Jim Oliver is out in front, and we figured out in a little while that we could drill down dip by drilling backwards on this thing at an angle almost parallel to it, and the holes would steepen at a certain distance, and yeah, we were able to do nice cuts at like 45 degrees across this thing. And so here we are drilling, we're following it way down, and we've hit some areas that are a little bit shallower, and they thicken quite rapidly. And of course, they thin quite rapidly after that if it steepens again. But we're slowly figuring out how to build good tonnage. And we don't have all the assays in yet, but it looks like these things are going to be economic. At least 3/4 of these holes we're drilling are going to be economic. Just in that 1,300 meter long zone.
Mhm.
Once we step out to the north, we're going to start punching holes on the surface, and some of those will be going through that parallel zinc silver zone, which is a lot thicker and more tabular features there that we can build big tonnage on fast also, if we want to be going down that route. And luckily, when you go through that zone, you go through the gold zone anyway. So, and then 5 kilometers away are showings that haven't got a hole in them. But mining, yeah, I mean, it's simplistic mining. If like Luis was saying, vein mining there's a lot of people that know how to do that well. We've even had a proving company up here to look at this operation here, because it looks like you can add a lot of tonnage fast and get a nice sized mine going. Not the world's biggest mine, but a couple thousand tons per day at those grades is very attractive, especially if there's large blue sky. And there is parallel zones, not just this one feature that we're working on. Oh, it's exciting.
You did a PEA recently, but then even in your presentation here, you said this isn't really a production story. This isn't about moving an asset toward production right now. This is about exploration. So why did you do the PEA? Just so that sort of question is.
Well, we definitely wanted to update it from the ancient one that they'd done, which was sort of full of holes, and yeah, you want to make sure you're not spending all this exploration money on something you can never put into production. So, and I've been hearing forever about all this difficulties we would have with pre-treatment of gold concentrates, or trying to sell a deleterious gold concentrate, even in China, where they don't want to commit to anything on a long period of time. So go ahead and do that and make sure you can, if you're going to brag about the upside, at least make sure you can turn the switch at some point. And we've got a lot of experience, by the way, in this area, permitting and building mines up and down the Kootenay Arc. So it's achievable, I think. We're fairly confident about that. And it's not going to be an environmental disaster waiting to happen or anything like that. It's going to be a very simplistic operation. Costly, very costly, but very profitable.
Right. That's what grade does for you.
Yeah. And with these, POX plants back when Ross was there, that was a horrible thing to think about. The technology was new and there was lots of things nobody knew. So now it's a completely different story. There's dozens of operating pressure oxidization plants around, new ones being built by the day. More than a third of the gold resources and reserves in the world are refractory right now. So we think we figured out a good way of dealing with it, and put that aside. And like you say, that had to be done. People wanted to see that there was a clear path forward on this project if we're going to add another couple of million ounces in the next year.
I think I should just leave it right there. I think that was a good spot to wrap up with Rokmaster. Thanks, John.
Yeah, and any of you are, and I want to thank people for coming out today, especially on the busy schedules. But if anybody wants to arrange to see any more information or talk to metallurgists or geologists or even come on site, just give us a call.